Alright, what's up guys, and it's another red day in the stock market. Look at this, we are down 1.24%. If we look at the holdings, we're only down on two stocks really. That is AMDOX, we're down $1.95, and UTG, which was, for my last video, my newly acquired utility stock, we are down $3.02, so we're not hurting too bad. If we look back on the week, we're actually up 30 bucks, which is 2.8%. So it has been kind of like a pretty good week, even though last video I was betting kind of a red day. But for my own research, the only reasons why I could find that we're in a red day was mainly because of the whole coronavirus resurgence. Everyone's fearing that wave round 2, but like I said last video, you can't call it a second wave if you're not over the first wave. But Apple just announced they're going to be reclosing some stores, and the WHO says coronavirus has entered new and dangerous phase. So obviously this translates to the market as a red day, but just because it's a red day doesn't mean that there aren't plays out there. So for the focus of this video, I want to be turning over to IVR, which is Invesco Mortgage Capital. They're pretty much a holding company which engages in financing, investing, and managing residential, commercial, mortgage-backed securities, mortgage loans. So in simple terms, that they just handle mortgages. And I just saw something from June that 30% of Americans did not pay their mortgage. That is like almost 1/3 of the population. That is a crazy number to think about. But if we're looking at really the security of IVR here, it's actually a very risky play, to be honest. Almost at a 39% dividend yield. But if we look at the 5-year, that's pretty steady. For something risky like this, the best case scenario you would want for its track history would be, a horizontal plane. Like, that's fine. But here we're in Robinhood's account section. So if we look at my overall portfolio, we can see most of my holdings are in ADP, JP Morgan Chase, Disney, SPHD, which is again our 500 company ETF. Next is our bonds ETF, and then AMD and VNQ, which is our REIT stock or REIT ETF. So as you can see, I'm pretty invested in like safe quality stocks that are paying me, some of them, monthly dividends. And the reason I'm choosing to go with IVR is mainly for the fact of just how cheap it is. It's a risky play, but it's not really going to dent my overall total portfolio. And to be honest, like $4.27, you pay twice as much when you go out to eat. Like, I go to In-N-Out and I get a double with Animal style fries and a drink. That cost me 12 bucks. That's 3 times the amount right here. So I'm planning on buying maybe like just a couple shares right now. Here, if we look at the buying power, I have 17 bucks chilling on the side. So this is really not going to affect me at all. Like, this is just a little bit of money to throw in. And it's kind of like a little riskier play, but I'm really just trying to target that high dividend right now. Speaking of the dividend, if we look, that dividend yield almost, well, on here it says 35%, Robinhood says 39%, but the payout ratio is 71%. Ignore the growth. But it's going to pay out 2 pennies quarterly. If I buy 2 shares, it's going to pay out 4 pennies quarterly. Like, that's like nothing, and this costs literally like nothing. I spend twice as much eating out fast food. So we're going to be buying 2 shares of this. We're also going to be depositing $100 into the account. So of course I could be waiting just a tad bit longer. If we were moving into next week, we could find that, hey, stocks could keep dropping a little bit more as the whole resurgence of coronavirus keeps on taking effect. If we look back at the 3 months, it bottomed out at about, $1.94. And if I was to buy 2 shares of that, I'm down like $6. But I really don't mind losing that money because this is just like almost like a little throwaway. I'm just really trying to get that high dividend yield right now. All right, guys, and we're back. And we look at the account. We have just purchased our 2 shares of IVR, and I deposited an extra $100. So we're right here. We're looking at IVR. We're down 2 pennies so far. My average cost was $4.25. So 2 pennies is like almost nothing. So if you're out there with kind of an already established portfolio and you really want something with just a high dividend yield and pretty much that costs dollars that you would just have spent on fast food anyways, check out IVR. And last part of the video, guys, I want to be going over just a couple stocks I'm looking at, and depending how it goes next week, if we see more red days, that $100 could be getting put to use. So the first stock I want to show you guys, again following up from last week's video, is Dover. Now I will be purchasing Dover if we see a little bit more red. I kind of want to see it hit below 90. If we go below 90, that's probably the price range that I'm going to pull the trigger at. You know, when it bottomed out, I was really trying to see if we can get closer to maybe low 80s or exactly at 80, but I don't think it's going to swing that way. If we go below 90, this will probably be the stock to buy. Next is AT&T. Now, I'm only up, I think, yeah, $2 total return. So we're getting close to my average cost of around $28.72. So depending if we dip below 30, like right now it's inching at 30. Like if we hit like 29s or something, I might buy the other half share just to total my 2 shares just because of this sweet dividend yield. It's at a sweet 6%, and I don't know, like it's a dividend aristocrat, so it's kind of safe, but it's also kind of not. Depends how you're looking at AT&T for its future longevity, but AT&T is a stock I'm keeping an eye on. Next is Dominion Energy. Now this is probably the stock that is probably most likely to reach my goals along with AT&T. It pays a nice dividend yield of 4.3%. If we look at its five-year track record, looking phenomenal. If we look where it bottomed out during this whole Corona crash, bottomed at about $60. For me, I think a solid price range is $80 flat. If I can get this stock for $80, I think it pays out like 2 something in dividends. This right here is the stock. Now I do have a lot of utilities already. I believe I own PPL, and I got monthly ETF for utilities, UTIG, but there's something about Dominion here with its 5-year track record. It pays a solid dividend with a nice yield, and I think it could look nice in the portfolio. 4th stock I'm looking at is Qualcomm. Again, following up from last week's video, you know, this just has a lot of future prospects to it, especially with the whole launch of 5G we're getting into. Again, if I can get this stock for $80, it is for sure a solid buy. Anything in the tech industry generally outperforms the whole entirety of the stock market. So I'm actually trying to really just cap in on some tech stocks because I know that's what's going to be growing. If you look back at the month, you know, if I had bought this just a month ago for under $80, that would have been solid for me. And last, the other stock I'm looking at is Starbucks. Now, who doesn't love Starbucks? They're pretty much in your town. They pay a nice dividend yield of 2%. It's kind of safe. If we look at the 5-year, you know, that's a phenomenal track record. If we look at the year so far with the whole coronavirus going on, you know, it hit about $60. It's at 75, but look where it peaked, like 90s, in the 90 range. Like we still have another like $15 till we hit that top again of 90. So if anything, Starbucks is probably going to be the stock to buy out of all of them I mentioned. If somehow we hit the 80 range for Qualcomm or even Dominion Energy, I may throw another $100 in and buy. But as we're standing, Starbucks is looking like the winner. Depending how it looks Monday, I'm probably going to be pulling the trigger. Like if we're reaching low 70s, 73s, oh yeah, it's probably going to be Starbucks. But that's going to be the video for today, guys. And look at IVR, we're already up 8 pennies. Like, come on. Who doesn't have $4 just to throw away? You know, you're going to buy fast food. You're going to go to the gas station. You're going to buy snacks. Just throw in some money. Get IVR. But if you can get some little bit of growth out of it and playing for that high dividend yield, you know, why not? If you got like a solid portfolio that's safe and most of your money is invested in safe long-term stocks, this is just something a little extra to add, like that little spice on the chicken, you know? But yeah, that's going to be the video. Down $12 today, down pretty much 1%. We'll see how it goes next week, and we'll see you in the next video.